traders, Cousin Vinny coming to you from theclosingprint.com on April the 14th, 2019. In this edition of your weekend video newsletter, we'll look at the markets. With most of the indices were mixed last week, with the industrials lower marginally, the London Stock Exchange, the Hang Seng, and the Bombay Stock Exchange all showing red. The leaders were mixed as well, with Netflix lower and Nvidia marginally lower. The bond stock ratio is short-term bullish. HYG and junk are both bullish and printing new highs, with the Dow Composite bullish making new highs as well. The S&P 1500 on a buy signal. Bottom line, most indicators are bullish with a few bearish signals, so a bit of caution going into the week. We want to see how things start out for tax day 2019. Spiders start off the week with momentum, continuation, RSI above 50 and rising. Volume is decent, above average, and the MACD histogram building taller histogram bars with MACD above its signal line and rising, showing that bulls are definitely in control. SPY daily finished on a high note for the week. We have junk bonds and NYD both confirming. So it should be no surprise that Renko continues to build white bricks. The cycle is up. We printed another white brick above this 287 level, with the 60-minute chart showing RSI above 50, pointing higher to start the week. We're above a very large volume by price bar. That's support now, just below. Tick cumulative, however, is moving sideways, showing that there is potentially some rotation. I'm thinking banks and financials, in addition to some industrials, tech names, with strength in transports as well. The sector heat map has mostly stayed neutral. We have some areas in biotech. We see the red here, in addition to some pharmaceutical and healthcare names, which are seeing a little bit of selling. But for the most part, we're neutral on the sector heat map. We also have international markets improving, a little bit more lime greens in here. Greece, of course, doing well. We pointed that out a couple of weeks ago, the trend. We have IYR, the REITs, and real estate continue to be sensitive to interest rates since the Fed's not raising anytime soon. We'd expect to see REITs, a number of them on the watch list, look good. Transports are improving. Airlines, truckers, rails, all looking very bullish lately, moving into an area of no overhead supply. New highs once we get above this level that we saw back in late November. MACD above its signal line, volume improving. XBI, biotech pulling back. The 200 days just below. Looks like a sideways range, so watch for weakness to persist in biotech. If it doesn't and starts to move higher, that would be another added tailwind for equities. Materials are improving. Communications improving despite Netflix weakness. Last week we had a counterbalance with Disney, Facebook moving higher. Energy trying to push above the 200-day, pulling back below it on Friday. Financials, specialty financials, broker-dealers, investment advisors, etc., all doing well. So focus on financials this week, with Citigroup tomorrow morning. JP Morgan and PNC reporting decent beats last week and looking like a follow-through this week. Industrials improving. Technology, XLK improving, staying between standard deviation 1 and 2, just trending higher, no overhead supply. MACD flat. XLP, despite the fact it's a defensive sector, it continues to push higher as well. Interest-sensitive utilities have been moving sideways for a couple of weeks. Looks like it's going to follow through. MACD's turning. XLV as a whole, the larger sector, healthcare, did pull back to the moving averages. The 200-day looks like support. Buyers step up. If we lose the 200-day, watch for XLV to continue lower. That would be a slight drag on the S&P 500. And consumer discretionary, which should continue to move higher with economic conditions improving. XLY will improve as well as consumers have more money to spend, higher salaries, new bonuses, the fewest number of people unemployed since 1969. That's a crazy number, and something few people are considering when looking at a double top in isolation on the S&P 500 or PE ratios or whatever they're looking at. In addition, the ratio between consumer discretionary, consumer staples continues to point to institutions positioning to a bullish follow-through, not a bearish one like they were back here in August and September. We pointed out this repeatedly. As long as these lines continue to move higher, you want to be bullish. Intermediate term. Short-term inflection is always random and possible. Finally, these weekly time frames, home improvements versus the S&P 500 on the weekly continues to move higher. Renewable energy like solars continue to push higher. Specialty finance versus the S&P 500 breaking out to new highs, outperforming the S&P 500. And semiconductors outperforming the S&P as this continues to rise. Some additional names that showed up on some of the scans: relative strength, automatic data processing, ADP, moving higher. Note the annual sales and earnings continues to climb. The company reports May the 1st, hasn't been confirmed yet. Looking for higher prices, breaking out of the pivot zone, currently 9% above the pivot in the past 43 days. So we look for follow through in the short term. Cummins International Engines CMI looking pretty strong, breaking higher. Big cup pattern breaking out. CSX Rails looking very strong, looking like it's going to break out this week. Maybe set some alerts. Easy to do with MarketSmith. Just come here, click on the link, set alert. Let's make it 76.86 this week. Breakout. All right. So now we've got an alert for CSX in under 30 seconds. Discovery Financial, one of the few names that I don't hear mentioned often enough. This one looks pretty strong. Look at the annual sales and earnings increasing in the specialty finance group, outperforming the S&P 500. Relative strength at 82 and climbing. Reports the end of April. Disney, of course, breaking out of a multi-year level, looking for a follow-through. And this one, as it breaks out, it was trending, then consolidating. Now it's breaking out. Look for it to start trending on above average volume, relative strength line climbing. All the financial media pointing out Disney last week. Eaton Corp looking pretty interesting. Annual sales and earnings climbing. Timeliness rating of B. Composite rating 73. This could be better. Accumulation distribution of D. Looking for this to follow through and move back up to 89.46 in the short term. For this company that provides electrical power and control equipment, hydraulic systems for truck drivetrains. Expeditors International looking pretty interesting. Watching relative strength line to start climbing again. It breaks out of this pattern. We look for a follow through on the daily and the weekly with earnings in May as it breaks out of this larger flat base. The airline ticket and hotel room consolidator, car rentals, vacation package, cruise ship services company, starting to look very bullish. We've seen quite a few names in this group moving higher, like Royal Caribbean Cruise Lines moving higher. Hilton also showed some follow through last week. The Chinese equivalent, C-Trip, trending, looking like it's going to break higher this week. Last week we had a little bit of a pullback. Looking for a follow through with earnings in mid-May. Okay, traders, this is going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on April the 14th. the day before tax day 2019. We'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Look for that in your inbox. Otherwise, have a great evening. I hope this helps, and we'll talk to you soon. Take care.